Hi guys, how are you? Mind this one titanium. Almost forgot my name. Patreon.com slash real macro. Patreon.com slash real macro. Come on down, subscribe, join us. We have live chats 24/7. All right, so we're building an economy from scratch. I want you all to understand how I view the economy. And I want to be able to speak the same language because everybody comes in with various different ideas and schools of thought and political views and whatever. This is the way I look at the economy. Okay, it's very simple. Number one, just to recap a little bit, humans are at the center of the economic universe. Okay, not dollars that incubator economists would lead you to believe that the dollar is more important than humans. No, that's not true. And that's why you always hear them stimulus this and stimulus that, and the government and the Fed and blah, blah, blah. No, forget about that. It's humans. Okay, that's the most important thing. Every time a dollar is created, that dollar is going to end up in the savings bubble, what I call it. Okay, so every dollar that is created by the Fed is going to end up by the Fed. Every dollar that's created um, uh, via deficits, okay, is going to end up in savings for the top 5%. All right, it's going to go through the productive economy and then end up in savings. How does it end up in savings? Well, think of it as private sector number one and private sector number two. Okay, household savings equals profit savings. Okay, this is very important because no profit can ever exist, okay, without the household saving. It's not possible, okay? And profit is net of cost, so that means it ends up in savings. Too many dollars for someone to spend or invest. Well, not invest, but all dollars end up in savings, and then those savings don't go underneath a mattress. They end up going into asset prices, stocks, bonds, real estate, and commodities. All right. Now, in a perfect economy, okay, the money would funnel between private sector one to private sector two, private sector one, private sector two in an ecosystem feedback loop. That would be a perfect economy, okay, if the money just circulated. And as the economy grows, then the deficits must also grow to reflect the new goods and services. Now, no economy is going to be perfect all the time, okay? But that's what we should be striving for. That's the key, that humans are at the center of the economic universe, okay? And we're always striving to have an ecosystem feedback loop. All right, so in this video, I want to talk about the digits. I want to talk about the dollars. The act of printing or creating or keystroking a digit of a currency does not create value. This is a very important point because everybody's waiting for the government to print and they think that printing is what creates value. No, the value is created by the private sector for the digits. Okay, and we can measure that. One way of measuring it is debt to GDP, but the better way to measure it is GDP to debt. If GDP is growing faster than the money supply, okay, that is excellent. That is very good. The economy is growing faster than the money supply. When GDP is falling relative to the money supply, that is bad because you're getting less and less and less GDP, okay, for every new dollar that is created. Now, this signals a direction that you're going towards hyperinflation. If that was not true, then no nation would ever hyperinflate. Venezuela, Argentina, Lebanon, most recently. Okay, Turkey's heading in that direction. What ends up happening? The money supply increases exponentially while the economy is crashing. This is the pure definition of hyperinflation. Okay, now when does this occur? Is it 100% of GDP? 150? It depends. It depends on your national wealth. It depends if you're an exporter. It depends on a great many things. But when you're seeing the money supply grow faster than GDP, and this does happen, okay, this is what happens in a recession. But when it happens consistently over the course of time, at some point you're going to hit the snap point. Okay, this is the point where everything snaps, and you start getting that devaluation of the currency. But again, let me emphasize that a digit created by the government, okay, does not come with value. The value is created by the productive economy. This is important because you'll get MMTers that would tell you, oh, government debt equals all private sector savings. Okay, this is baloney. And the reason it's baloney is because they lead you to believe that it's the government that creates value for the currency. And it's the government that creates savings for the private sector. But it doesn't. Okay? The private sector has two parts, as we mentioned, private sector one and two. Okay? Those dollars are always going to end up in the savings, which is in the top 5%. And it's a very good illustration of this, most recently with the $4 trillion in 4 months that have been deficit spent, and no one is richer in the private sector, but there are a lot of rich people that have received those dollars in profit savings. And something that confuses people is that the fact that they can, well, they can spend that dollar. The dollar has the same value. I can go out and spend it. It's real. Well, yeah, it appears to be real. And the reason it appears to be real is because the national wealth is so big. It's a very big economy in the US. We are 5% of global population with 25% of global GDP. And on top of that, we import. Okay, when we're importing, we're actually exporting dollars, and that's something we'll talk about here. But when you're exporting those dollars, that means that you are subcontracting out, and someone else is um, um, producing for you because your consumption is so high. Now, that's not the same economy when you talk about Lebanon, okay, for example, which is the most recent to hyperinflate, right? Lebanon was not is nothing like the U.S. So it gets a little bit confusing for people. But let me take you to another example. Trump 2017 tax cuts. This is going to be like jet fuel to the economy. We're going to grow. We're going to grow. We're going to grow. Well, deficits went to 4.5 before COVID to 4.5% of GDP. And what happened? The economy flatlined. It was growing at 2.5 maximum percent, which is exactly what it was growing at before. Okay, about 2%. So we went from 2% deficits, okay, 2% deficits to 4.5, and what happened? Well, nothing happened, okay? There wasn't more economic growth. There was, however, asset price inflation, stocks, bonds, real estate, commodities, okay? So this is real world examples. I'm not making this up. You can go out and check for yourself, right? It's not something, it's recent history. So remember, the act of being able to create a digit by the government does not come with value. And that value can be measured by GDP. Okay. Um, does the government play a role in helping the economy grow? Sure, of course. If it funds large projects with unknown risks, okay, for the benefit of the economy, for the people, that's different. But the government in of itself creates nothing, zero. The dollar is just a measuring stick, and that measuring stick over the course of time, okay, changes. For example, that I can give you, Warren Buffett used to buy a company that he deemed to be valuable with a 6 PE. Good luck finding a bunch of stocks now with a 6 PE, right? Why is that? Well, it's because the measuring stick has changed over the course of time with all the excessive deficits since the 70s. So, it's a different matrix. It doesn't mean that there's still not valuable companies. There are, but just not at a 6 PE. Okay? So, again, that's the measuring stick. And that's just one example. Lastly, Government used to be only 10% of the economy. Today it's 25%. What is it going to be 20 years from now? 35, 45, right? So this gets into an argument between socialism and capitalism, and I don't want to get into this argument right now. Maybe we'll discuss it later. But again, it's very important to remember that the act of printing does not come with value. Okay, um, the value can only come from the productive economy and the unproductive. The private sector is where value for this currency comes from. Okay, and when the GDP relative to the money supply is falling, you're headed in the wrong direction. You're not you're not doing this ecosystem feedback loop. All you're doing is pumping deficits through the productive economy and increasing the dollar amount, not the value, the dollar amount to the savers. All right, so keep that in mind. No government can print value for a currency. Only the private sector can do that. All right, so that's it for this video. We'll do another one here shortly. All right, take care. Talk to you soon. Bye bye.